I am really glad you could join me today. We're going to take a gentle look behind the scenes at one of the most important documents in the world that you've probably never heard of. It's a document that works quietly, making sure all the products we use can travel across vast oceans to get to us. This is the story of the Bill of Lading.
You know, it sounds almost impossible, doesn't it? But it's absolutely true. Just try to picture a massive cargo ship out on the ocean, filled with thousands of new cars, or maybe containers packed with the latest electronics. Well, the legal ownership, the control of all of that value, can be held in a single set of paper documents. And that document is what we're here to talk about today. Understanding it is really the key to understanding how our entire global economy works. And this gets us to the central challenge that has always existed in trade. Let's try to put ourselves in the shoes of both people involved here. First, let's say you're the seller. You've just produced thousands of t-shirts, and you found a buyer for them on the other side of the planet. So you load them onto a ship, but as soon as that ship sails, you no longer have your products. Your biggest worry is, am I actually going to get paid for this? Now, let's flip it around. You're the buyer. You've agreed to pay a lot of money for those shirts. Your worry is, if I send the money first, how do I know the right goods were actually shipped? Or what if they never show up at all? This basic problem, this gap of distance and trust, is exactly what the Bill of Lading was created to solve. So that's our goal here. We are going to walk through this solution one step at a time. By the time we're done, you'll have a very clear understanding of how this one document does three critical jobs. It's a legal tool, a financial key, and a logistical pass, all to keep global trade moving safely. To make sure we cover all our bases, here's the plan. First, we'll start with the fundamentals. What is a bill of lading? Then we'll get into its most powerful function, how it acts as the key to ownership. From there, we'll look at the very specific rules banks follow when this document is used for payment. After that, we'll see how technology is starting to change this old process. And finally, we'll do a quick Q&A to make sure the main ideas are crystal clear. All right, let's start with the absolute basics. What is this document, really? At its heart, a bill of lading, and you'll often see it shortened to just BL, is a formal document. It's given by a carrier, which is just the shipping company, to the shipper, the person sending the goods. It's the carrier's official way of saying, we have your stuff. For pretty much anything that gets sent by sea, the bill of lading is the master document. But as you're about to see, it's so much more than just a simple receipt. You see, this one document actually performs three totally different vital functions all at the same time. Let's break them down. First, like we said, it's a receipt for goods. It's the official proof that the carrier has taken control of the cargo. Second, it's evidence of a contract. It outlines the basic agreement to move the goods from one port to another. And third, and this is by far the most powerful part, it's a document of title. This is a legal idea that means the paper itself represents ownership of the goods. Whoever has the document owns the goods. And it's this third function that we really need to understand next. So this brings us to our next section. How can a simple piece of paper act like a key to unlock a container full of valuable goods? Well, the magic really happens when the bill of lading is what's called negotiable. All that word means is that it can be transferred from one person to another. When it's in this form, the physical document is the legal ownership of the goods. Honestly, the best way to think of it is like the title to your car. You can't just go to the DMV and say that car is mine. You have to hand over the official title document to prove it. It's the exact same idea here. You can't just show up at the port and ask for your container. You absolutely must present the original negotiable bill of lading. Let's walk through a real-world example to make this perfectly clear. Okay, step one. A seller in the US ships a bunch of cars to a buyer in China. The shipping line gives the seller the original bill of lading. Step two, and this is the important part, the seller doesn't mail that document to the buyer. No, they take it to their bank in the US. The US bank then sends it securely to the buyer's bank in China. Now the banks control the ownership document. Step three, the ship arrives in China, but the buyer can't get the cars. Why? Because they first have to go to their bank and pay for them. Only after the bank gets the money does it hand over the bill of lading. Step four, now finally, the buyer has the key. They take that original document to the port and give it to the shipping carrier. And step five, the carrier checks the document and at last releases the cars to the buyer. See how that works? It creates this perfect system where the buyer can't get the goods until the seller is guaranteed to get their payment. And it's really important to get this. This is not just a company policy. It is a strict legal requirement. The shipping line is legally obligated to release the cargo only to the person who physically presents that valid original bill of lading. If they mess up and give it to the wrong person, they are responsible for the entire value of the cargo. That's what gives this piece of paper all its power. Okay, so we've established the bill of lading is the key to the goods. Now let's look at how banks use it to control the money. This is usually done with something called a letter of credit, which is just a promise from the buyer's bank to pay the seller, but only if the seller provides a perfect set of documents. And when I say perfect, I mean the banks are incredibly strict about the rules. Banks all around the world follow the same set of international rules for this. And one of the most important rules is that they will only accept what's called a clean transport document. A clean document is exactly what it sounds like. It's a bill of lading that has no negative notes written on it by the shipping company, nothing that says the goods or the boxes looked damaged when they were loaded. Let's look at a direct comparison to see why this matters so much. On the left, you have a clean BL. It's perfect, no notes about damage. The seller gives it to the bank sees it's clean, and the payment goes through. Simple. But now look at the right side, an unclean BL. In this case, the carrier wrote a little note on it, something like 2 crates of damaged upon loading. When the seller takes this document to the bank will immediately see that note and reject it. Payment is stopped right there. It's a critical safety net for the buyer, making sure they don't end up paying for goods that were already noted as damaged before they even left the port. And that clean rule is just the start. The bank goes through a whole checklist. First, they need the full set of originals. Usually 3 are made, and the bank needs all of them so nobody else can try to claim the cargo. Second, it has to clearly name and be signed by the carrier. This proves it's authentic. Third, it can't mention a charter party. That's a separate contract to rent the ship, and it adds complications and risks the bank won't accept. And finally, and this is a big one, it must have an on-board notation. This is the absolute proof that the goods were physically loaded onto the vessel, not just dropped off at the port. If even one of these details is wrong, the bank will reject the documents. Now, for hundreds of years, this has all been done with paper documents flown around the world by couriers. But as you can probably guess, in our modern world, that's starting to cause some problems. Which brings us to the move to digital. One of the biggest issues with the traditional paper method is something people in the industry call fast ships slow documents. Today's container ships can cross an ocean pretty quickly, but the paper bill of lading still has to be physically sent from the seller to their bank, to the buyer's bank, and then to the buyer. It is incredibly common for the ship to arrive at the destination port while the paperwork needed to get the cargo is still stuck in a courier's airplane. This is a huge issue, causing delays and expensive storage fees. And that's the problem the electronic bill of lading, or EBL, is designed to fix. Instead of paper, it's a secure digital file. It can be sent between everyone involved in minutes, not days, completely eliminating those transit delays. We've gone over a lot of information, so let's just pause for a moment and go over some of the most important concepts with a couple of quick questions to make sure everything is clear. Okay, first question. Let's think from the buyer's perspective. When they're using a letter of credit, why is getting their hands on this specific document so important? And the answer comes right back to its main purpose. It is the ownership paper. The whole system is designed so that the buyer can only get this document from their bank after they pay. And without that document, they simply cannot claim their goods from the shipping line. It creates a perfect, unbreakable link. No payment, no document. No document, no goods. All right, second question, which is a good test of those banking rules we just talked about. What's the immediate result if a bill of lading has a note on it saying the goods are damaged? That note about damage instantly makes the document unclean. And the international banking rules are very clear. Banks must reject an unclean document. The second they see that note, the payment is stopped. The seller doesn't get their money, and the problem has to be sorted out between the buyer and the seller. It's like the system's built-in alarm bell, protecting the buyer from paying for something that might be broken. So as we come to a close, let's just quickly summarize the key things to remember. First, a bill of lading does 3 jobs at once. It's a receipt, it's evidence of a contract, and most importantly, it's the title to the goods. Second, having that negotiable BL in your hand is the same thing as having legal ownership. Third, we learned that banks demand a perfectly clean BL that meets a whole list of strict rules before they'll release any money. And finally, we saw how electronic BLs are starting to replace paper to make trade faster and more efficient. For hundreds of years, this piece of paper has been the bedrock of global trade, moving from handwriting to typewriters to computers. But technology never stops, so I'd like to leave you with a final thought to consider. As things like blockchain and AI become more common, what's next? Will we even need documents in the future? Or will ownership just be a token in a digital system?
How do you think we can make all of this even more secure and more efficient?
I would really enjoy reading your ideas on that, so please do share them in the comments section. If you found this guide helpful and you learned something today, I would appreciate it if you'd click the like button. It really does help more people find this content. And of course, please subscribe so you don't miss our future guides. Thank you again so much for your time and for watching.
Stay ahead in the world of global commerce. Subscribe to Vanijja for expert analysis. And don't forget to like this video.